5 Tradingview trending indicators put through our scoring system, ranked from lowest performing to highest. Clear explanations of what they offer and if they're worth adding to your charts. Mean deviation loop. Created by LyraRS, this indicator applies mean absolute deviation, or MAD, calculations through 2 distinct methodologies: a Bollinger Band-style channel and a directional scoring loop. MAD measures volatility by calculating the average distance between price and a moving average, giving equal weight to all deviations regardless of size. Users select which signal mode to follow or combine both through a hybrid scoring system. The Bollinger Band mode calculates MAD by measuring average absolute distance between price and a selected moving average over the look-back period defaulting to 25. The system then creates asymmetric bands using separate multipliers for upper at 1.4 times and lower at 1.0 times zones, triggering signals when price crosses these boundaries. The for-loop mode operates through a different mechanism. It weights the source price by MAD values, calculates a moving average of this weighted price, then runs a directional scoring loop. The combined signal mode averages the binary states from both Bollinger Band and for-loop methods. This normalized score crosses user-defined thresholds to determine final trade signals. A statistics table displays real-time signal states for all 3 modes simultaneously, allowing comparison of their current readings. Customization spans moving average type selection with 16 options from SMA to T3, separate length and multiplier controls for both calculation modes, independent threshold settings. The for-loop scoring replicates trend strength measurement available through simpler oscillators. All those separate thresholds and parameters create optimization risk, where you'll find settings that fit history perfectly but fail in live trading. Neural probability channel. Created through a collaboration between Harmony Algo and AlgoPoint, this indicator applies kernel regression mathematics to price analysis. At its core sits a rational quadratic kernel function that assigns weights to historical price points based on their proximity to the current bar, creating what the authors call a neural baseline, essentially a mathematically smoothed fair value estimate. The kernel engine processes price data through 3 key parameters: look-back window with a default of 24 bars, bandwidth for smoothness control defaulting to 8.0, and regression alpha set at 2.0 that determines whether the model focuses locally or considers broader context. Volatility measurement combines mean absolute deviation with ATR, producing hybrid channel bands at inner 1.5 times multiplier and outer 2.5 times multiplier distances from the baseline. The mean reversion logic triggers long signals when price crosses above the lower outer band, and short signals when crossing below the upper outer band, essentially buying oversold conditions and selling overbought ones. Unlike traditional Bollinger Bands, which use standard deviation, this indicator's mathematical foundation lies in kernel density estimation, a machine learning technique for probability distribution modeling. Trading applications center on mean reversion strategies where extreme band touches signal potential reversals. The inner bands can serve as partial profit targets, while outer bands mark entry zones. Traders might combine this with trend confirmation, entering mean reversion trades only when the baseline slope aligns with higher time frame direction. The mathematical terminology sounds impressive, but the practical output is just another volatility channel with mean reversion signals. You're essentially getting Bollinger Bands with extra steps and fancier language. Real trading performance would likely mirror traditional methods without providing meaningful edge over simpler alternatives. Trend lines. Created by Ebesi Halil, this indicator automates trendline detection through systematic pivot analysis. The system scans historical price action for pivot highs and lows using adjustable strength parameters ranging from 5 to 15, then identifies support and resistance lines by connecting pivots that align within a fixed ATR-based tolerance zone. The core algorithm searches for trend lines where at least 3 pivots, adjustable from 2 to 8, fall within 0.5 times ATR of a projected line, creating what the author calls zones rather than single lines. The logic includes a proximity-based filtering system that displays only the single nearest support and resistance zone to current price, preventing chart clutter while maintaining focus on immediately relevant levels. Breakout detection triggers alerts when price closes beyond zone boundaries, after previously trading within them, while touch alerts activate when price wicks into the zone without breaking through. Customization includes adjustable look-back periods, with a default of 300 bars, pivot source selection between high or low or close prices, minimum pivot confirmation requirements, and separate color controls for resistance and support, with transparency settings. This solves a real problem since manually drawing trend lines is both time-consuming and subjective. The zone-based approach makes sense because support and resistance actually function as areas rather than precise price levels. However, those fixed ATR parameters become a limitation when switching between different instruments or adapting to changing market conditions. Breakout targets. Created by Algo Alpha, this indicator identifies price consolidation ranges through volatility analysis, then projects risk-reward targets when breakouts occur. Upon detecting consolidation, the algorithm identifies the most recent pivot high or low using a swing length parameter defaulting to 99, divided by 2 for lookback. It then determines whether the high or low pivot is more recent, using that as the range starting point. This creates dynamic ranges that adapt to actual market structure rather than fixed periods. The overlap prevention system checks whether proposed ranges intersect with existing active ranges before creation. Ranges extend forward each bar until price closes beyond their boundaries. Breakouts trigger when close exceeds the top for bullish or falls below the bottom for bearish, immediately removing the range and initiating target calculations. Target placement uses ATR-based stop-loss positioning, defaulting to 5 times ATR from entry as the risk reference. Take profit levels, multiply this risk distance by user-defined ratios. Lines and labels display entry price, stop loss, and all 3 targets with extending tracking until TP3 is reached. The system maintains all graphics until TP3 hits or a new breakout occurs. Customization includes range detection period, overlap prevention toggle, ATR period for volatility measurement, stop loss multiplier, and 3 independent TP multipliers. Color controls adjust bullish and bearish scheme elements. The volatility-based detection gives objective consolidation identification, which beats manually drawing boxes around ranges. The pivot-anchored construction adapts smartly to actual market structure. However, those fixed target ratios assume every breakout has the same potential regardless of range size or market conditions, which limits real-world adaptability. Order blocks volume delta 3D. Created by FluxChart, this indicator combines order block detection with volume delta analysis and 3D visualization. The system identifies order blocks through a point-of-control methodology that scans for break-of-structure events, then anchors zones at candles where price touched the most frequently tested level during the preceding range. The break-of-structure logic triggers when price closes beyond recent swing highs or lows with adjustable strength of 5. Volume delta measurement operates on either chart timeframe or lower timeframe data through security calls. For each identified order block, the system aggregates total volume, bull volume from close greater than open candles, and bear volume from close less than open candles that occurred at the point of control level during the formation range. These values convert to percentages displaying the bull-bear split within each zone. The 3D visualization constructs polyline depth faces using ATR scaled offset coordinates, creating a perspective effect where zones appear to have front faces and top surfaces. Users choose between horizontal display with bull-bear split, shown top and bottom, or vertical display, with split shown left and right across the zone. The depth parameter controls how pronounced the 3D effect appears. Order blocks remain active until invalidation occurs via wick penetration or close beyond the zone, which is user selectable. The retest detection requires a very specific condition. The candle must open and close outside the zone while wicking into it. This ensures the retest happened during a continuation move rather than consolidation within the zone. Customization includes swing length, invalidation method selection, number of nearest zones to display ranging from 1 to 20, zone extension in candles, and comprehensive volume delta controls, including time frame selection and display style preferences. The point of control-based methodology actually advances beyond basic order block indicators by identifying the specific price level where institutions likely place their orders. The volume delta integration adds real evidence of buying and selling pressure rather than just guessing at order flow. The 3D visualization looks impressive, but doesn't add much analytical value beyond aesthetics. For those interested in the Quantum Ribbon Pro, we've built a comprehensive backtesting framework. Check the tutorial in the description to see how our community is validating their strategies.